हेलो एवरीवन, आप सभी का फिर से एक बार स्वागत है मेरे यूट्यूब चैनल में जिसका नाम है कॉमर्स ट्रेजर। इन दिस वीडियो वी आर गोइंग टू कंटिन्यू अवर डिस्कशन ऑन KSET and NET 2021 practice questions. This is part 11th of this series. If you have not seen the last 10 parts, I am putting the link into the description. Do watch those videos, and without wasting much time, let us go to the next 20 questions. Which of the following statement is true? Capital expenditure does not affect the profitability of the concern, but revenue expenditure does. Capital expenditure affects the profitability of a concern directly, but revenue expenditure does not. Capital expenditure affects the profitability of a concern indirectly, but revenue expenditure affects directly. Both capital and revenue expenditure affects the profitability of a concern directly. So always remember, capital expenditure is an expenditure which is incurred for a long term period. It is not for one specific accounting year. The benefit from those we can take for number of years. For example, if you purchase a fixed asset, it can be used for number of years. Whereas revenue expenditure is an expenditure which is only for a short term period, which can be used only for 1 year or even less than 1 year. Example, rent, wages, salary. So capital expenditure affects the profitability indirectly, whereas revenue expenditure always affects the profitability directly. So option number C is the right answer for this question. That is, capital expenditure affects the profitability indirectly and revenue expenditure affects directly. Internal environment of a business includes business ethics and moral standards, definitely it includes. Business and managerial policy, definitely it includes. Prospects of business development, definitely. So all the three options are correct. Therefore option number D, all of these should be the right answer for this question. Which of the following are motives of merger? Now, merger is nothing but whenever two companies come together and continue their business, that is called as a merger. And there are many motives of merger. Among the following options, let us see which are the motives of merger. To gain economies of scale, definitely it is a motive of merger. Two companies merge together so that they can exploit the economies of scale, they can increase the level of production and decrease the cost of production. To utilize the underutilized resources, definitely it is also a motive of merger. Two firms merge together so that they can make benefit of underutilized or unutilized resources. To break monopoly, no, this cannot be a motive of merger, because whenever two companies merge together, they are creating a monopoly but they are not breaking a monopoly. So therefore option number A and B, that is both A and B, are correct answer of this question. Put the following step of strategic management process into the correct sequence. So scanning and evaluation of business environment, formulating strategies, implementation of corporate strategy, deciding about the mission of the organization. Now a very simple way to identify this answer is, always remember the last step in strategic management is nothing but implementation of corporate strategy. Usually controlling is there, but among the option, implementation definitely should be the last step of corporate strategy. So third option last is only one option, that is option number A. So as per this option, the first step is going to be deciding about the mission of the organization. Second step is scanning and evaluation of the business environment. Third step is you formulate the strategy, and finally the last step is you implement those strategies. An HR dashboard is visual display of HR metrics, HR development, management goal, none of the above. So HR dashboard is nothing but it is a visual display of HR metric. Now what is an HR metrics? HR metrics are nothing but these are some information regarding to HR, such as turnover rate, how much time the workers have spent in the department, attendance of the workers, satisfaction level of the employees, etc. So HR dashboard is a tool which allows us to track, analyze and report about the human resource of the company. Which of the following transactions is not recorded in cash receipts journal? Borrowing money from bank, definitely when we borrow money from bank, we have to record in cash receipt journal. Receipt of customer payments, definitely this also has to be recorded whenever we receive cash from customers. Sale of equipment for cash, whenever we are selling it for cash, we have to record in cash receipt. So option number 2, expensing prepaid rent is not recorded in cash receipt journal. Which of the following does not influence the design of an accounting information system? Accounting information system is nothing but the AIS. Organizational culture, definitely it is going to influence. Information technology in the company, it is going to influence. Business strategy, this is also going to influence. Legal environment is not going to influence the accounting information system. The dash is a set of consumer who profess a sufficient level of interest in a market offer. Potential market, available market, target market, penetrated market. So it is option number A, potential market, from which we get our prospects or the consumers who are going to purchase and who have interest in our product. The demand for a company product decreases from 1000 units to 800 units on account of increase in the price from 100 to 120. The point elasticity of demand of the company is. So how do you compute point elasticity of demand? Point elasticity of demand is nothing but change in quantity divided by original quantity into price divided by change in price. So let us find out what is the change in quantity. Change in quantity is nothing but from 1000 it has become 800. So now the quantity has been decreased by 200 units. And price, and how much change is there in the price? Let us see. So earlier the price was 100, now the price is 120. So 120 minus 100, the price has changed by rupees 20. So quantity change is minus 200 divided by the original quantity was 1000 into original price was 100 rupees and the change in the price is rupees 20. So 0 0 0 0 gets cancelled, 1 0 and 1 0, again 1 0 1 0. So 2 ones are and 2 ones are. So you get minus 1. Option number A is the right answer of this question. The BCG growth share matrix uses dash and dash of market growth as a criteria to make investment decision. Relative market share and quarterly rate, relative market share and annual rate, absolute market share and annual rate, absolute market share and quarterly rate. So right option is option number B, that is relative market share and annual rate. Here the rate which we are talking about is nothing but the growth rate which should be taken annually, and relative market share is nothing but how much share we have in comparison to our competitor. Absolute market share is nothing but our market share in the total market. So BCG approach is nothing but it divides the different business into 4 different categories based on relative market share and annual rate. So market share is taken on x-axis and growth rate is taken on y-axis. So this is how we write high, low, high, low, high and low. So low market share but high growth rate is called as question mark. High growth rate and high market share is called as star. Low growth rate but high market share is called as cash cow, and low growth rate as well as low market share is called as dog. Manager's failure to work for the maximization of shareholders' value is known as vertical governance problem, agency problem, principal problem, none of these. So this is called as agency problem. So agency problem is nothing but it is a conflict between the manager who are the agents who are running the business and the shareholders who are the owners of the business, as both the parties will have their own interest and they are going to work in their own interest. There is going to be a conflict which is called as agency conflict or agency problem. This agency problem can be because of earning retention problem, because of time horizon problem, or because of risk aversion problem. The independent directors appointed on a board of a company bring independent judgment and thinking, do not carry voting rights, possess no qualification share, none of these. So whenever you appoint an independent director, he always brings independent judgment and thinking, and he tends to work in the favor of the shareholders and not in the interest of the management. Too much reliance on internal recruitment can result in internal conflict, high labor turnover, reduced job performance, poor group and team dynamics. So the answer for this question is option number C, that is reduced job performance. It may also create internal conflict, it may also create high labor turnover, but the best possible answer for this is reduced job performance. Theory of capital structure with the assumption of no corporate tax is known as relevance theory, irrelevance theory, both A and B, none of the above. So whenever we assume that there is no corporate tax, then theory is a irrelevant theory. It says that capital structure has no impact on the value of the firm, and the same thing was said by NOI theory, that is net operating income theory. But NI theory, which was given by Professor Durant, says that capital structure is relevant to the value of the firm. beta of a stock measures sensitivity of stock to changes in GDP, changes in value of the market index, change in the competitor's rate of return, all of these. So always remember, beta is nothing but it measures the sensitivity of a stock to the market index. So answer should be option number B, that is change in the value of market index. The formula to compute beta is nothing but covariance of IM, that is security and market, divided by market variance. Which of the following are the physical symptoms of anxiety? Racing heart, definitely whenever you are anxious, your heart starts pumping. Sweaty palms, definitely this is also a feature of anxiety. Flushed cheek, this is also a feature. So all of the above are symptoms of anxiety. So this is a part of HRM. Whenever we take an interview, based on the physical symptoms, we try to find out whether the candidate is confident enough to take the job or not. From the following, identify an incorrect acronym. TRIM is acronym of Trade Related Improvement Measure. No, this is not correct. It is Trade Related Investment Measures. So option number A is the incorrect option. TRIP is the acronym of Trade Related Aspects of Intellectual Property Right. Correct. UNCTAD is an acronym of United Nations Conference on Trade and Development. This is also correct. The Hawthrone studies are of utmost significance as they form an honest and concerted attempt to understand the human factor. Definitely yes. Employees' attitude, yes. The workers' social situation, yes. So all of the above is the correct answer for this question. Hawthrone studies are very famous. These were the studies which were conducted by Professor Elton Mayo and group of researchers around 1920s and 1930s. So this study was done to find out how different aspects of work environment affects the productivity of the workers. So this experiment was done in Western Electric Company, and it is regarded as one of the most important theories or experiment in the human resource subject. Which cost accounting standard deals on cost of production for captive consumption? CAS 4, CAS 5, CAS 6, CAS 7. So cost accounting 4 deals with cost of production for captive consumption. Cost accounting 5 standard deals with average cost of transportation. Cost accounting 6 standard deals with material cost, and cost accounting 7 deals with employee cost. So there are in total 24 cost accounting standards, in which cost accounting standard 3, that is related to overhead, and cost accounting standard 10, which is related to direct expenses, are a bit important from exam point of view, and remaining also they may ask you. So just have a look at all the 24 cost accounting standards. Indian Accounting Standard 12 prescribes the accounting treatment for income tax, business combinations, financial instrument, none of the above. So Indian Accounting Standard 12 deals with income tax. Business combinations is dealt in Indian Accounting Standard 103. Financial instruments are dealt in Indian Accounting Standard 32. This is all for today's video. If you like the video, please hit the like button, and if you haven't subscribed my channel yet, please subscribe my channel and also press the bell icon so that you can get a notification as soon as I upload a new video. Thank you for watching the video, and let us meet again with another video.